Hello everyone and welcome to our CCH Networks webinar, FBT Compliance Update with the ATO. I'm Bianca and I'll be your moderator today. In today's webinar, you will hear directly from the ATO on the latest changes in preparation for your FBT reporting requirements. Our presenter today is Anna Longley, Assistant Commissioner, Private Groups and High Wealth Individuals at the ATO. Joining her are our panellists, Greg Kent, Partner at PwC, and Elizabeth Lucas, Partner at Grant Thornton. Facilitating today's webinar is Sasha Savich, Tax Advisor at Viva Energy. You can submit questions via the question tab at any time throughout the webinar. I think we're ready to begin, so I'll hand you over to Sasha.
Good afternoon, everybody, and thank you for connecting. Welcome to the CCH FBT webinar. We've got close to 750 attendees, so very pleased to see so many people connecting on such an important topic ahead of the FBT season. Also great to see a representation from both the corporate sector, large and medium enterprises and the government, so very diverse number of attendees today. So hopefully over the next 90 minutes be a great opportunity to hear the latest updates and get some guidance on where we stand on a number of the FBT related topics. So we're quite privileged to have in the room today Anna Longley, Assistant Commissioner at the ATO. So I'll just give a little bit of a background on Anna. So Anna is the Assistant Commissioner for Engagement and Assurance Services in Private Groups and High Net Wealth Individuals. She's been responsible for embedding client engagement approach in both Victoria and Tasmania. She's also the product owner for FBT, and since joining the ATO has held a number of roles across the organisation. So very privileged to have you here, Anna, and looking forward to hearing a great presentation and lots of questions. So in addition to Anna, we've got Greg Kent, Partner at PwC, responsible for employment taxation, and Elizabeth Lucas, also a Partner at Grant Thornton. So I'm certainly looking forward to listening to the slides over the next 90 minutes and hopefully some interactive questions as we go, which we'll try and cover off either at the end or throughout the session. I would just make a point that we're not here to provide advice explicitly, but we'll guide you through a number of these topics and provide examples as appropriate. So over to Anna.
Thank you very much. So we've decided to run this session today as quite an interactive session. So you'll hear Greg and Elizabeth jumping in from time to time with their comments. Also in relation to questions, please do feel free to shoot them through as we're talking about a particular topic. And as we get time for them, we'll attempt to touch on them. I would like to thank everybody for attending today. It's a fantastic opportunity for everybody to, as Sasha said, have a listen to what's new in the FBT space and what might be on your radar this year. So just starting with overview, we're going to start with some of the more administrative aspects to start with, such as return lodgment and payment dates. We'll go through some of the notable law changes over the past year and upcoming. Talk about a few common areas that we see in return preparation, what's attracting the ATO's attention in respect of a compliance focus, and then also spend quite a bit of time, hopefully, on some of the advice and guidance aspects, so maybe some of the practical compliance guidelines and the other advice that's been put out from the ATO of late. Firstly, as I said, return lodgment, payment dates and FBT rates. The 21st of May is the date for self-preparers to lodge their FBT returns and also to make payment on the FBT return as well. Lodgement options are via paper or standard business reporting enabled software. So you'll see, if you are not well aware of what standard business reporting enabled software is, you could go to sbr.gov.au to find out more about that. There's reports there of which agencies and which reports of those agencies are supported. So you'll see that it's not just tax office reports there. And there's instructions on the website for your FBT return. They were published Tuesday of last week. So they are current for the 2018 year now. The FBT return is downloadable from our website, ato.gov.au, or you can use our publication ordering service as of the 1st of April. Ways to get the paper lodgement there. Unfortunately, there's not any other electronic lodgement options for self-preparers. In respect of those employers who are clients of tax agents, 21st of May again is the date for paper returns. Payment will be due through a tax agent on the 28th of May, so 1 week later, and returns lodged electronically are due on the 25th of June. So your tax agent will be able to use the practitioner lodgement service, which is why they've got that later return date available to them. Generally, if you are lodging it electronically, you can expect an assessment from us within 2 weeks. Via paper, that would be approximately 10 weeks. So definitely quicker if you are able to lodge electronically. Please also do advise if the lodgement is not required in a particular year prior to the lodgement date, so we don't follow you up. Also, there is on the FBT return itself, there's also a box to check if you feel that lodgement won't be required in future years. You can request a deferral, but you will need to request that in advance if you're unable to meet the due date. We do require you to advise of the circumstances as well that require that deferral. You've got some information there on how to obtain more information about that.
Anna, I just thought of a question that clients have often asked me, which is about whether they need to lodge a return when they've got zero taxable value for any of their benefits. Perhaps they've collected employee contributions or something like that. And I know we've had confirmation from the tax office before, but it might just be mentioning again that there's no need to lodge a return as such if there's actually no, taxable value or FBT to be paid. Of course, I guess if you've paid FBT in instalments, you'll want to do that to get your refund back again. But yeah, if there's otherwise nothing to declare, then there's no need to lodge a return.
Yes, of course. Okay, so the FBT tax rates. For the 2018 year, the FBT rate is 47%. That represents the highest marginal income tax rate plus the Medicare levy, currently 2%. You will need to know the Type 1 and Type 2 gross up factors as well. The Type 1 gross up factor is used where the provider of the benefits entitled to a GST credit. You'll generally use the Type 2 gross up factor where you're not entitled to a GST credit. It's also used when we are looking to calculate reportable fringe benefits amounts as well. And so they are amounts that we will talk about shortly, but that go onto your employees' payment summaries at the end of the year. So the fringe benefits rates and threshold page information is up there as well. You'll also see information there about car fringe benefits statutory formula rates, car parking thresholds, and quite a few other rates in there as well. They are updated annually, and I am going to be looking at those rates as of next week to approve them for the coming year. We've put quite a busy table in here now. Now looking at it, I do wonder why. but really it was to show a comparison really of some of the rates that have changed, particularly between 2017-2018. You'll see the FBT tax rate has reduced by 2%, in line, as I said, with a highest marginal rate for income tax purposes. And for those that are public benevolent institutions and also public hospitals, you'll see there the thresholds there for exempt benefits. I was going to go on to FBT Law Updates. Actually, before I do, we do have a question regarding deferrals. The question is, are there penalties if a deferral is requested in advance? Generally, no, but you do need to advise us that you do need that deferral, and we'll advise you of the extended date or agree with you to the extended date there. There have been 2 law updates this year, which is or relevant to this year: reportable fringe benefits update, and also small business entity concession. 2 proposed changes are to the worker entitlement contribution legislation, and also changes upcoming to the fringe benefits tax rate. Okay, so reportable fringe benefits changes. This affects employees of non-exempt employers primarily. Reportable fringe benefits amounts are the amounts included on an employee's payment summary, generally for payments above $2,000, or benefits I should say, above $2,000. Up until 1 July, or 1 January I should say, 2017, when the amounts were reviewed by primarily Centrelink, but there are other agencies, but primarily Centrelink, they would actually degross amounts for the reportable fringe benefits amount. So essentially, what would be calculated in the adjusted taxable income of your employees for the purposes of some benefits such as family tax benefits, social security and tax offset entitlements, it wouldn't include that grossed up amount. There's been changes to legislation now that the reportable fringe benefits amount will no longer be degrossed, and therefore there may be implications for your employees as to their payments, family tax benefit, as I said, social security, whereby if that amount is reported incorrectly on their payment summary, you may find that they are being paid incorrectly, either too much or too little in some instances. It doesn't affect employees of exempt employers. That amount still will be degrossed for those employers. However, it is extremely important that employers identify correctly on payment summaries whether they are exempt or non-exempt. And you'll see on the FBT form itself, as well as I believe it is on payment summaries, the reference to Section 57A of the Fringe Benefits Tax Assessment Act. If you are not an exempt employer and you mark that you are, then you may well find that your employees, I should say, are being paid too much. And if you are an exempt employer and you mark that you are not, then you'll find that your employees may be paid too little. This actually was an issue for us this year. We had quite a few exempt employers who were marking that incorrectly, significant implications for some of their employees. As you can imagine, if your employees do rely on Centrelink benefits, it would be potentially quite distressing to them if they're no longer getting that same amount. So the reason that I made specific mention of that is because I am aware that payment summaries are often done by those who work in payroll services, not necessarily your tax managers. So it is something that you do need to make them aware of. I would probably say that it's also good to educate your staff as well as to what that might mean on their payment summary and what the potential effects are for them.
That's certainly an area where we got a lot of questions, Anna, around people not necessarily understanding the question to, tick yes or no, were they exempt under Section 57A, some people not being familiar with what that section was actually about. So I guess it's really important to understand, from the employer's perspective, whether that's a yes or a no. And basically, you are exempt if you're a public benevolent institution or a hospital or other organisation like that has that FBT exemption. But for everybody else, it's a no, including the rebatable organisations.
Yes.
I'm just interested also, Greg, it's one of those changes that, impacts the employee. So how have you found that with some of your clients? Are there any examples you can share? I know it's an incoming change, but
yeah, not particularly. I think that might be a function of the clients that I typically deal with and the size of those organisations. I think a lot of the smaller charitable not-for-profits is where it heavily impacts.
Yeah, that is where we saw the majority of the issues this year. And because, as I said, it was from 1 January 2017, it actually it affected people from their 2017 payment summaries, so July of last year. And we've had to send out some communications to those affected organisations. The small business entity concessions. This was one that applied from 1st of April of last year. So we're coming to the end of the first full FBT year on this one. Prior to 1st of April 2017, the small business turnover was $2 million. That's been increased to $10 million for definition of small business. It is particularly relevant to FBT because that actually started in terms of income tax at the start of the 2017-18 income tax year. So there's a period of time there where we're in transition, so something to be mindful of. So that's particularly in relation to the small business car parking exemption. The extended work-related items exemption is in relation to primarily mobile devices. So prior to this change, we would allow FBT exemption for up to one device, and now it's multiple, including if you are having devices with substantially similar functions. There's more information as noted there on our website.
Any comments from the panel there?
I think the main thing is to remember that it's just for the small businesses.
Yeah.
The multiple mobiles. Don't get too excited when you hear multiple mobiles unless you're under that 10 million threshold.
Yeah. It's probably something that's very difficult to track how much because there's no way of really reporting it. So unless you're auditing every single small organisation, you wouldn't know how many employers are taking up those concessions.
That's correct. Okay, worker entitlement contributions. This is a proposed law change currently, I believe, sitting with the Senate. This is a piece of legislation that was within, or is currently, I should say, within the Fringe Benefits Tax Assessment Act. So under ownership of the Commissioner of Taxation. Under this proposal, registration of worker entitlement funds will move over to the Registered Organisations Commissioner instead. So effectively what these funds are they funds that are designed to provide long service leave, sick leave and redundancy payments to employees. They are to be paid for the benefit directly of that employee. There are some changes if unfortunately the employee is deceased, but apart from that it is for the particular employee. So if at the moment you do have a registered worker entitlement fund, there will be a transition period whereby transitioning funds go over to the Registered Organisation Commissioner. I would say it's generally the same. There's not really any changes, I should say, in terms of what's required to be an endorsed fund. But this change effectively came about to protect workers through greater governance and transparency. There was a Royal Commission that preceded this, and this was the outcome of one of the recommendations under that.
And I believe employees can get access to those funds on the web in terms of who they are.
I'm not aware of where they'd find that information. I'm not sure if Elizabeth or Greg are aware of that. Do you know if it's published or not?
No. I think the main thing with this change is if it is applicable to you, just make sure you register.
Yeah.
Because it's a significant FBT cost if you don't. And it's just a registration process.
Yes, that's right. And so we have done quite a bit of work regarding what the interaction between the two agencies will look like. And we would expect that for FBT purposes, once you are registered properly, there'll be no other changes required, and your FBT would function in the same manner as you do currently. This is another proposed change that, again, I understand is sitting with the Senate. So due to the implementation of the National Disability Insurance Scheme, there is a proposal to increase the Medicare levy by 0.5% from 2% to 2.5%. And this would be a consequential change as that comes through. It would be applicable, as it says there, from 1 April 2019, so the FBT year ending 30 March 2020.
Just add in a comment there for any of the not-for-profits listening in relation to salary packaging and the relevant thresholds that apply for salary packaging. When we've had FBT rate changes in the past, and that busy slide that you had up before, and the grossed up capping threshold that applies to the different not-for-profit entities was changed at the same time as the FBT rate was changed.
Yes.
In order that the type 2 salary packaging amount that people could package within the caps didn't change, as in the degrossed number didn't change. I'm not aware of any sort of proposal to change the grossed up caps in 2020 or 2019-20 for the same reason, which if we don't see an increase in the grossed up capping numbers, therefore the amount that people can salary package within their relevant caps will decrease and potentially require sort of some systems changes for those organisations to make sure that people stay within their caps because it'll be a different taxable value number that they can salary package.
Yep, I'd agree with that.
Cool.
Okay, moving on to some of the common errors we see with employers completing FBT returns. These are quite general and nothing here is too complex, but they are things that we are seeing relatively frequently. All of these errors can be corrected, but of course it may result in reverse workflow for the person who does your FBT returns, and also delays in the ATO completing what we need to do. So it is just something to be mindful of. As I said earlier, the 2018 FBT return form will be released through our publication ordering service shortly. Should be available already on the website. The FBT return instructions have been published to the website. That was my first job to approve at the start of this year. Also incorrectly stating ABN or TFN information. This is particularly important to review where the employer may be a trust with a trustee that has a separate tax file number. Make sure you are recording the correct one. As I said, it won't be fatal, but it may delay things. Incorrectly stating that future returns won't need to be lodged. This may trigger deregistration action. So it just means that you would have to re-register in the following year. Again, just more administrative workflow for you.
Are there penalties on, because if that happened, you wouldn't pay instalments in the following year. So if an entity then needed to re-register, is there likely penalties on not having paid instalments through the year, or is?
I haven't considered that question. I must be honest.
So I'll reverse that. I won't raise it.
Let me go back and look. Please give me names.
Something
No.
something to get back. Right. I was just wondering, I know with so many corporates listening in today, you know, what are some of the tips you'd give to corporates? FBT only gets the focus for a couple of months of the year at best. And, you know, there's all these things you need to do, lots of exemptions, lots of concessions. You know, what are some of the tips you'd give our taxpayers today in terms of how they prepare for this?
Well, I think this is probably, attendance at this webinar is probably first and foremost, I would say.
Absolutely. It's become a must attend.
But also, I would say a really good resource that the ATO has is Fringe Benefits Tax, a guide for employers. That is on our ATO law site. So that is updated very frequently. And so that's a really good place to look to remind yourself of the types of concessions that are available, which benefits are exempt and which are not exempt, and the parameters for those. So that's probably, I would say, the best place to go. Of course, if they do have an advisor, that's probably really another place to go to.
It's an excellent tip. I've seen that guide, and it happens to me all the time. FBT return time, I end up pulling Greg, and I'll probably stop doing that now.
Well, I think probably, particularly if we do have employers that provide quite a number of benefits, and some of our biggest FBT payers do provide a number of benefits to a very big employee base. Sometimes that guide could be your starting point for thinking about the types of benefits you will be providing over a year, preferably to what you have provided over the year. And that might be the trigger for you to go and talk to your advisor about particular aspects of benefits that you've provided. Like I said, it's probably better to start trying to think about that at the start of a year rather than trying to correlate everything at the end of a year.
Very good advice.
There was another document that the ATO published, it's probably going back 5+ years ago. It was aimed at government entities, and it talked about the compliance process, and it took you through a best practice, I think it was actually called a best practice guide for government employers. We've referred to that a lot in terms of having a process for your FBT, both leading up to lodgement, during the process itself, and post-lodgement activities as well, all around good governance around your FBT. That's something to look at as well. I must admit I haven't noticed that for the past few years, but that was a really good document as well. It's probably still buried in the website somewhere. But
yeah, we're actually progressively trying to get all of the information into that main document so that there's not multiple places that people can go to. Obviously, as well, our website has basic information as well. In most cases, that will refer you through to the guide for employers as well.
Yeah, the other thing that I know Elizabeth and I sit on a couple of committees, and one thing the ATO constantly reinforces that I think it's helpful for everyone on the call to hear as well is a lot of guidance that the ATO provides on technical matters now is not finding its way into tax determinations or rulings. It actually finds its way into the employer guide. So
yes,
in terms of the first point of call on any technical matter, that's probably the place to go.
Thank you. Some great advice there in terms of the preparation ahead of the FBT season. Probably while Anna's preparing for the next slide, I would just add from a corporate perspective, sitting in-house as an advisor, we have found that early engagement works extremely well. Around about now, I would say, February, March, and dual purpose. One would be to plan for next year in terms of the types of benefits that are being provided, and the other is to clearly, introduce that focus leading up to a wrap-up of the current FBT year in terms of the work that happens with HR, marketing, and other functions within the business. So we do that every year, and it does seem to work well. It does uncover a lot of conversation. So another one to consider as you're planning to prepare your FBT returns.
So I'm going to move on to some of the common errors we encounter. Some more, I guess, specifics. The first one is in relation to trusts and fringe benefits tax, and really the issue here is how do you determine whether you've got an employee or a beneficiary of a trust. And so I suppose it's useful to go back to the definition of employee for fringe benefits tax purposes, which really just requires someone to be entitled to receive salary and wages. So it is not actually to the point whether they do receive salary or wages, or even whether they have an employment contract or not. So it's good to look through some of the factors surrounding that person, think about why the benefit was provided, what's the person's role within the business, and possibly tied to that, how is their role within the business portrayed to the public or the clients that the business services, who's responsible for business decisions within the trust, and also have a look at maybe some of your employment contracts, trust deeds and resolutions, etc. That might help determine whether they're a beneficiary or an employee. Of course, a beneficiary will not be subject to fringe benefits tax, but an employee will.
The other one is, that's probably the right time to comment, be careful not to pay FBT on contractors.
Yes.
Well, independent contractors, it's amazing the number of times you look at a vehicle fleet of an employer and there'll be half a dozen people in there who are actually independent contractors receiving vehicles. It might cause you to question why independent contractors are receiving vehicles within your fleet, but to the extent they're not common law employees, you shouldn't be paying FBT on them either.
Which I suppose you can also use the tool on the ATO website to determine whether you do have an independent contractor or an employee. Very big questions there, and not that this is in relation to superannuation, but then there's changes or there's differences within superannuation legislation as well as to what constitutes an employee. So just to confuse everyone thoroughly. Logbooks. These are a big one. There can be quite serious consequences if your employees do not fill out their logbooks correctly. There could be a scenario where 100% of the use of the vehicles is classified private use. That is a very big fringe benefits tax cost. So it is really important to ensure that your employees do understand the importance of filling out logbooks correctly. We had a question prior to the webinar today about electronic logbooks as well. I've had a look in our system and I can see 27 class rulings having been issued in respect of electronic logbooks. I would say from looking at that, probably most of the major providers have got a class ruling in place, which demonstrates that their electronic logbooks are accepted logbooks for the purposes of the FBT legislation.
Anna, not wanting to put you on the spot at all,
yeah.
probably doing so. Does the ATO have a view on taxpayers using technology? Is it a positive thing? Is there no difference to the ATO whether organisations have manual processes versus automated processes? Are there any views by the ATO on the benefits of technology or otherwise?
This is probably more my own view, seeing what's kind of happening across the office. But we are, particularly in the private groups and high wealth individual space, looking more so at tax governance. So what are the things that an organisation or an entity has in place that can assist with us assuring their tax position? So where you've got more automated processes in place, potentially less room for error, that would suggest to me that your tax governance is probably likely to be viewed more highly, and therefore we would view that more positively. That is definitely not to say that manual processes are inferior, but I just guess if you can demonstrate that you've got that really good control over things, then that would be beneficial.
Before we move off the logbooks too, I think even with automated or electronic systems, the critical issue is getting people to describe the business purpose properly. And the old example of just writing work is not sufficient. I mean, a lot of the automated processes have drop-down menus for people to select from, which is really helpful. But it's quite critical to make sure that purpose is adequately described so that the logbook is, valid, I guess.
Yes.
And the other thing that pops up too with logbooks that I've seen is, there's a lot of apps available on mobile phones for logbooks, and that can be helpful. But you do need to keep in mind that if a lot of different people are using the same car, the logbook is attached to the car. So if you've got multiple employees all using their own phones with their app with the same car, there's going to have to be some kind of collation of all that data to create the one logbook for the one car. So from that perspective, apps aren't always the best. They can work really well where it's one employee, one car, but if you've got multiple employees using the same car, perhaps think about other mechanisms, or just have in mind that you need to collate that data.
I suppose the point that comes out of that for me is remembering how close the FBT return is due to the end of the FBT year. So if you are having to do a lot of collation at the end of the year, that's really eating into the time that you need to prepare that FBT return. I think it's something like about 7 or 8 weeks, isn't it, after the end of the...
Maybe we could look at pushing out the lodgment date again.
Oh, she laughs it off. Okay, employee contributions to offset FBT. So where a benefit has been provided and an employee makes some payment as regards that benefit, then there would be an offset to the fringe benefits tax that's payable to the amount of that employee contribution. Now, one of the things that we have recently done is update our website. This is slightly off point, but it reminds me, we've recently updated our website in relation to employees claiming deductions in respect of expenses that they have paid. So where we have got expense payments where an employee has been reimbursed by an employer, then there's no deduction available there. We are in the process of updating our declaration that's available on the website as well for that.
That's worth, I think, the employers noting, it could be worth them putting a little note on the bottom of their internal claim form, please note you can't claim this as a tax deduction when you're claiming it for reimbursement with your employer. Perhaps it's not an FBT issue as such, but it just helps not get the employees into trouble.
Yes.
Just a general question on the technology. I mean, we talk about returns and good governance. From a sort of practitioner's perspective, what are you seeing out there, the uptake on that, and how's that changing? There's a lot of talk about robotics and machine learning and all sorts of fancy things, but what are you really seeing out there? I think Anna made a good point that spreadsheets are still okay, provided you're doing the right thing, you're following the process. It's not to say that your process should be viewed as being inferior, but you probably have a better finger on the pulse.
I think probably two things. A couple of years ago, there were various technological offerings out there around a range of fringe benefits or tax solutions. They were the shiny new toys that everyone wanted to know about, but there weren't many early adopters of that technology. It was sort of sit back and look and get comfortable with what's out there. In the last year in particular, we've seen a huge increase in people actually adopting and implementing the technology. So be that the electronic logbooks that Elizabeth was talking about and Anna was mentioning, it doesn't surprise me. Every salary packaging fleet leasing company probably has a private ruling associated with the tool that they're probably offering as part of their overall fleet offering. I think the importance of technology is on a couple of different levels. One, you want it to simplify what you're doing. So if the technology doesn't make the job any easier, then question if the technology is worth developing in the first point. The other thing is you want it to get rid of inherent risks in the process. So the spreadsheet example, you've always got the issue of cells being overwritten, deleted, adjusted, and because people trust the spreadsheet and the underlying formulas, if there's a mistake in it, there's an inherent risk of not checking it either, and trusting the totals at the end of the column. Whereas technology that's developed particularly purpose-built for a specific calculation, that's the merit of that. It decreases that inherent risk. So if you can find technology that does both, and so it makes your life easier and allows you to lodge correctly, then that's where you see a lot of adoption of the technology.
Yeah, thanks for that. It sounds like we're significantly ahead now with automation, but also sounds like robots aren't going to be doing our jobs just as yet, at least as far as FBT return preparation goes.
Unfortunately, the FBT return doesn't spit out of the general ledger, so that creates difficulties on its own, and technology hasn't quite figured out how to address that properly yet either in a lot of ways. So it's making our life a bit easier, but it's not a perfect solution yet.
Yeah, the best answers for technology in the FBT space at the moment are the ones that, so everyone's complaint about FBT is how tedious it is and how much administration there is for such a relative small liability. The technology that can specifically target and make that easier is the technology that's going to be popular.
Yep, agree.
Okay. The other comment that I wanted to make in relation to expense payments, and this is one that we do sometimes see in the privately owned and wealthy group space, is where a director of a company in particular has private expenses paid by the company. So this could potentially lead to consequence under Division 7A if it's not actually a fringe benefit. So it is important to understand the circumstances in which the benefit or the amount is paid to the person and the reasons why. So whether it's in relation to them being a director or whether it's in relation to them being an employee. Again, just understanding whether you've got an employee payment
Yeah, I don't think a lot of people realise that directors are employees effectively, as in in their status as a director. But yeah, as you say, it's about the interrelationship with them being an owner of the business as well, potentially. Yeah, important to know why the benefit's being provided.
Yes. Sorry, we're having a few issues with questions. There's a lot that have come through, but I can only see one line at a time. So it's creating some difficulties in me being able to speak and respond to them at the same time. So we might actually come back to some of the questions, might be a better way of doing it. But please do keep them coming through. We will try and get to them. Okay, so this is the one where I think probably a few more people might have their pens poised in relation to what attracts ATO attention. So this is in relation to our compliance focus. These are the topics that we see most regularly and we take action on most regularly. Details down the bottom there for what attracts our attention on our website. You'll see all of these set out in more detail on that page there. So we are looking more and more to obtain data that assists with reviewing what's going on across the landscape. This isn't particular to FBT or to employers. And so we do, in respect of motor vehicles, for instance, gather information on new cars acquired by businesses. And I should probably say any other assets that are acquired by businesses as well. ATO activities are primarily focused on ensuring that private use of cars is correctly reported in the FBT return. And it is, I think, important to note that a car benefit may actually be taxable even if your employee has not driven the car. So that may be where it's garaged at home, for instance, it's taken to be available for private use, even if an employee hasn't actually driven it. So I think this does cause some issues. Elizabeth or Greg's probably got more information on that from a practitioner perspective, but I think it does sometimes cause issues for employers because they feel that security might be better if vehicles are parked at home. That notwithstanding, unfortunately, this is how the legislation works, notwithstanding the security concerns.
That issue does come up a lot. I still hear that question, you know, but we've got nowhere to secure to park it overnight at work, so we make the employees take it home, so it's really not a benefit. But yeah, as you say, it's garaged at home overnight, it's just deemed in the FBT net. I guess our strategy around that is to look at what's the typical usage of the vehicle, and if it's predominantly for business use, then perhaps the operating cost method is a better way to go to minimise the FBT exposure. But I guess, yeah, prima facie it's in the net, and then the second question is how do you minimise your actual tax obligation?
So I think I touched on employee contributions a little earlier, but that is definitely something that does attract our attention. We need to make sure that contributions paid by an employee to an employer have been declared in both the fringe benefits tax return and the income tax return to avoid overstating contributions, particularly in the FBT return as well.
And the did you say GST then too? Sorry, the GST bit going in the BAS as well as
yes,
get mixed out too.
Oh, I did not say that. So thank you. So the FBT employer rebate, it's very important to apply the correct concession there. Exempt employers are those that are classified as public benevolent institutions, health promotion charities, government hospitals and ambulance services. We focus on ineligible employers who incorrectly claim this rebate. So just because it is marked on your FBT return, do be careful about that, because we will generally review and pick that up if that's been claimed incorrectly. Obviously, that can be an error, and we appreciate that obviously sometimes errors happen, and it will be treated accordingly if it is simply an error. Living away from home allowance, we're going to spend a bit more time potentially on this, looking through the draft ruling that was issued last year. But common errors do include claiming reductions for ineligible employees, failing to obtain declarations from your employees regarding their living away from home allowance, and applying, I suppose, the incorrect food and drink allowances as well. And there is a whole chapter on living away from home allowance in our FBT, a guide from employers, so that's a good place to look. Now, one of the focuses that I'll be looking at this year is making sure that we're trying to connect with those employers who are currently not in the FBT system, but we think should be. So we'll be doing, we'll be putting a bit more focus onto that, especially this year. So some of that can be errors as well, not appreciating fringe benefits tax even exists, or that what they're providing constitutes a benefit to which fringe benefits tax is applicable.
So there are a lot of analytics underpinning that helps identify potential employers that should be?
Yeah, so that's what we'll be having to look at. So there'd be probably some data matching involved in that as well. And then along with that is the incorrect calculation of benefits, of the value of the benefits. Car parking valuation is a bit of a perennial one. It is topical. I think we will cover it later, but we do have a taxation ruling under review presently that's been under review for some time that will update the existing one. I believe that's the existing one's just over 20 years old. Time for an update on that. So I suppose the common errors that we would see in this one is the market valuations for car parking that are significantly less than fees charged for comparable parking. So in these circumstances, you do need to make sure that you're comparing with a car park within a 1 kilometre radius of the premises on which the car is parked. And it does have to be, you do have to make sure that the use of rates paid is where the parking facility is not readily identifiable as a commercial parking station.
So Anna, we have seen some correspondence from the ATO around this issue. Is that likely to find its way into that new draft ruling, is it? Or the employer guide?
So we are currently looking at that. So the issue to which Greg is referring is particular at this point to Perth, for Western Australia, and there's a question there about whether rates that employers are comparing to are commercial rates. We are looking at an option at the moment of annotating our current taxation ruling. So that's something I'm currently looking at. I can't say that that is what's going to happen, but we're looking at that, and we are mindful of that in the upcoming ruling that we're currently looking at. We are also considering whether there needs to be additional communication with employers that aren't represented by one of the, I guess, more major FBT advisors.
Yep.
I guess that's then about identifying who those employers are, which is, I guess, the next question that we've got.
Yeah, I think based on what the ATO has said previously, I think maybe the employer guide's a good location for commentary and guidance around it. So setting sort of parameters that
Yes.
are considered reasonable by the ATO?
Yes. Yeah, I suppose one of the issues that we have been considering is the fact that we do have a current ruling as well.
Yep.
So we also don't want advice that looks contradictory.
Yeah. I know I think we get to the ruling
Yes.
slides.
That's right. So advice and guidance. I probably won't spend too much time on this general slide, but I just did want to touch on some of the things that we're seeing in the advice and guidance space at this point in time. Practical compliance guidelines, we will speak about a couple coming up, but they are a way for the Commissioner to outline what we see as maybe a more administratively practical way of administering the law. We've got a draft one in relation to FBT at the moment and one that was finalised in 2016. The other big thing that we are trying to do is consulting earlier on tax technical issues. So we will touch on the FBT and remuneration safe harbour working group that we've got. We've also got consultation steering group, safe harbour steering group. So we are making sure that we're consulting with relevant members of the profession before we're putting out advice and guidance. And you will also see instances where we're issuing things as drafts that allow comment before we finalise. We are currently trying to update our older advice products. One that, of course, we've just mentioned is the taxation ruling in relation to car parking. And another one that I did want to mention is early engagement for advice. So particularly where you are a public business, not-for-profit, privately owned or wealthy groups, and also tax professionals can come to us for early engagement for advice products. So this is instead of applying directly for a private binding ruling, you might come and speak to us first. We can work out whether a private binding ruling is actually what you need or whether some other product would suit you better. This can result in quicker outcomes for clients, particularly those who don't need a 100% level of certainty. It could also hopefully reduce their costs as well.
We've had some good experience with that process, so you can endorse that for you. It's a very sort of practical way to approach a tricky issue sometimes.
That's good to hear. I'm always happy to hear the
turnaround
stories.
Time. Just interested to know, and others on the call.
For us, it's varied because it depends on the actual issue. So in some cases, you would say it speeds up the process because you can, get an answer pretty quickly, particularly like Anna says, if you don't need 100% certainty, you don't need a ruling. But if it's something that you do want, to then end up going down the track of having a ruling on, then, you could argue that it potentially lengthens the process, but at least there's more certainty around you going down the right path at that point.
Yeah, and it doesn't lead you into a dead end in terms of having to go appeal to court or something, or a tribunal to get an answer. You can, what I think we've valued the most about it, particularly on complex issues, it might actually take longer, but you're getting the ATO's views and you're sharing your views with the ATO throughout the process. So it's not that silence, lodge, silence, receive something back. It's
much more collaborative.
Yeah, so that is advantageous. Doesn't mean you always get the answer you want, but it is advantageous.
We have a callback service available on our website. There's a form there that you can fill in. Our standard for responding to you is 2 days or 48 hours. I think the benchmark for that is extremely high. I wouldn't go so far as 100% because I'm not certain, but I do know that it is extremely high. There is also a streamlined now private ruling application form, so it can assist you in getting through by having an electronic form now. And for those who are not aware, our edited versions of written binding advice are now located on our ATO Law site if you are looking for them. Although I should also put the disclaimer there that they still are not binding, and they're based on facts of a specific situation at a point in time as well.
And I was reading her notes then.
I was reading her notes. Okay. So these are two, one is a draft taxation ruling and the other is a practical compliance guideline. Both were open for public comment. I understand that the taxation ruling one is due to be completed shortly, although I don't have a date on that at this point in time. In relation to the practical compliance guideline, the comments for that closed earlier this month. We got 23 public comments back, which is really useful, and so we're currently reviewing those with a view to finalising that hopefully by the end of April. Do you think we should go through these?
Oh, we can make a few comments, I think. Yep. Conscious of leaving time for questions as well at the end.
I'll just add there were a couple of questions on those particular instruments as well. So
okay.
This would be a good opportunity to address those as well.
So do you want me to make a couple of comments first and then go into the questions?
Be good. Yeah.
So Elizabeth and I in particular have been involved in this ruling from the initial drafting, I think, and have seen the iterations of it. It is a very important ruling because it, well, and maybe this is my personal view as opposed to the collective view, but it provides us with a modernised view of the deductibility of travel, looking at examples that occur in the modern workplace. The challenge obviously is a lot of the precedents that we rely on are historical and in some cases very aged. So, and I think the John Holland case brought that to a head where it started to question travel that's undertaken in the course of work as opposed to travel that allows people to get into a position to work, and somewhat adjusting the line in the sand where that's historically been drawn. A couple of the key things that it now hinges on is in relation to the level of direction and control being exercised by employers. I think that brings a lot more common sense into the classification of travel as deductible versus non-deductible. And just to obviously probably state the obvious, to the extent the employer is directing and controlling the travel and the employee is effectively following instruction in accordance with their employment conditions typically, that's likely to end up in a scenario where the travel is deductible. The other component though that's probably equally as important is in distinguishing between private and work-related activities is whether the individual is getting paid to undertake that work. And simplistically, if someone's on an hourly wage, or hourly payment, that's quite easy to determine. Where you have fixed contracts, that becomes a little bit more tricky, and to try and decipher whether the activities actually fall under that overarching contract, what they're getting paid for, or whether it's separate and distinct from that. There are quite a few examples in that draft ruling that will be helpful in that context. I know from a meeting that Elizabeth and I had with the ATO probably 6 weeks ago, there was still some uncertainty around that, and not surprisingly, because direction and control and paid to undertake travel, they're not black and white answers in many cases. So that's part of the challenge, and this is going to be a significant public ruling in terms of guidance for the community. So I think the ATO rightfully taking its time to make sure that it gets right and consulting quite broadly.
Well, yeah, I do agree with your comments, Greg, and I think it will be a good document when it'll be interesting to see, I guess, exactly where it ends up. A couple of particular points I think relevant to note on this is one that other final rulings have been withdrawn in the meantime. So even though this ruling is still in its draft form, anything else that we may historically have been relying on along this topic has effectively been withdrawn. So this is the guidance that kind of applies already, even though it's only a draft. And secondly, I think there's just one particular example in there, or particular scenario that's becoming more and more common these days, which is a scenario where you've got people travelling between particularly two different states. And in the past, we often thought of that as, well, when the person's gone to one state to work there for a couple of days before coming back again, we traditionally thought of that as a living away from home scenario, and the travel to and from therefore being of a private nature. But actually, if the employee is working in both places, they have what the ruling calls coexisting workplaces, then the travel to and from is treated as deductible travel, which I think is the right outcome, but a bit of a change perhaps from what we were thinking in the past. And as I said, it's becoming more and more common, so I think it's important to notice that.
Are there a couple of questions there at all that we can answer on topic on this one?
Yes, I don't know what you think. Did you want to comment on some of these? Or
one is kind of an administrative one to start with, which is when I say it will be issued shortly, will it be before the end of the FBT year? Unfortunately, I don't have the answer to that one at this point in time. And then the question is, what should employers do for preparation of their return? I think you can probably take it that ruling is, very close to where the ATO is going to end up on that issue. I'm assuming from Greg and Elizabeth's comments that the meetings that they've had recently with the people who have been preparing that ruling have suggested that we are still going down that same line, and in fact that's my understanding as well.
More tweaks than major changes.
That's right.
Yeah, so I think you can probably take it that that's where more or less that's where that's going to end up. Okay, were there any other questions that you could see there, Sasha, on that one?
I think on that one that covers it. A lot of questions have come in. I will say what we're trying to do is talk through the relevant topics whilst we're on the slide, and we'll attempt to answer all of them, of course, but just much of the time we may not get to, and I'm sure the diligence CCH will on all these things.
There was a pre-question that asked about taxi travel from the airport to home and whether that would be otherwise deductible. If the purpose for being at the airport or arriving back to the airport was work-related, so business trip, for example, then yes, the taxi between the airport and home would be otherwise deductible. I was trying to think if it's and this is probably saying the obvious, but if it was a private reason for the travel, then you don't get the deduction for the trip. But I think everyone would appreciate and acknowledge that.
I suppose the other point to make is, and this is probably a rare circumstance, but if your employment begins and ends at the airport as well, that's probably a rare circumstance for most people. If you're going on a business trip, you're generally taken to be travelling for work purposes from the time you leave home, on duty for work purposes from the time you leave home. Okay, so there have been some questions around the draft practical compliance guideline that we're currently working through. Somebody has also actually asked us to talk through some of the points on the 2016 practical compliance guideline as well. So we might start with the draft PCG that was issued last year. Just wondering, did you want to kind of open with comments on that, because that might be supported by some of the commentary we've seen from
I guess
community.
You go first.
I can make some comments in terms of feedback that I've been getting also in relation to this. Is it's relatively prescriptive about the number of kilometres that people can travel for private purposes and still treat these vehicles as exempt. I guess before launching into this, maybe it would be useful to just very quickly say what this draft guideline is about for those who aren't aware, but we're talking about exempt vehicles like utes and panel vans and those kinds of things that are exempt where they're only used for travel between home and work and business travel, and any other private travel is minor and insignificant. And so the draft PCG is about what is that other minor private travel, you know, what does it mean to be insignificant? So the draft does mention numbers of kilometres for deviations and the number of kilometres for wholly private trips, etc. And I guess the feedback that I've been getting is, well, if you're not required to keep any records around your travel, how are you going to know whether you've met the requirements of the draft guideline? And I'm guessing that that's probably a common theme in the 27 or whatever
has been, yes,
that you've received. So I guess that's something that the Safe Harbour Committee will go back to and work through. You know, the point of this is to try and do something that's practical and easy to apply for taxpayers. So if it's not going to be practical and easy, then I think, you know, we kind of need to go back to the drawing board, so to speak, or work out something that's a bit easier. But also the other points coming out of it are that it does talk about not applying to luxury vehicles or salary packaged vehicles. And I think it's important to note that that's really just about a sense, I think, from the tax office that these vehicles are more likely to be used for more significant private travel. It's not that there's a technical reason that they can't be exempt. And so I think it's worth noting that luxury vehicles and salary package vehicles can still, you know, be exempt under this, under the legislative exemption. Sure, they won't fit under the guideline, the PCG, if it's issued as it is, but employers can still take a view that they treat those vehicles as exempt. So I guess that's just something to keep in mind.
So this is probably more my personal opinion than anything else. I think obviously practical is really important. It's one of the 3 words in the title of the compliance guideline. I can appreciate the challenge that's laid out by trying to come up with a guidance that allows taxpayers to keep less records to evidence taxable or non-taxable items. At the same time, I appreciate that there's a risk from the ATO's perspective that if you put out a guideline that's too loose, then there's the chance for that to be abused and people to take advantage of that. In respect of this practical compliance guideline, I think it's got the 2 elements that I think are most important, which is it rules out. So the exemption is for work-related vehicles. So ruling out salary package vehicles makes perfect sense. It also, you want a pat on the back? It also, by limiting the private travel in terms of journeys, so you're limiting remuneration-related vehicles and taking them out of the equation, and you're stipulating the level of travel that's going to be accepted in terms of private travel. I don't see, other than potentially knocking out cars that would still be available based on those 2 criteria, why you would restrict luxury vehicles or why you would even go near non-business accessories. Because if you're taking out salary sacrifice vehicles, you're probably going to be taking out most non-business accessories. And remember, salary sacrifice vehicles includes remuneration-related vehicles. It's not just where you have a deduction out of your package. It's also where that vehicle represents an item of your remuneration. I think you could drop those 2 criteria and still have a really solid practical compliance guideline. I think the question will be, though, and it doesn't answer the number 1 question you raised, Elizabeth, is how do you prove you're not doing excess private travel if you're not keeping records? I think the only logical way you can do that is by policy. So you would need a robust policy in place. You would need evidence that you are going through a series of to test individuals might be signing up at the start of receiving a vehicle or access to a vehicle. You've read this policy and you understand you're not allowed to use it, and if you do use it for that purpose, you're either going to have to return the vehicle and have no longer have access, or you're going to have to pay out any associated FBT liabilities that might arise. You put that personal onus back on the individual, and then I think you can actually take away that record keeping requirement. But it arguably still opens it up for potential abuse, but and maybe an auditing program to keep it in check.
Yeah. So on the record keeping front, because that is where we got quite a bit of feedback. I think really what we're thinking about when we were putting this together was, you have the car logbook already for the business use potentially, and you could have an idea of business kilometres there. At the end of the year, you could review total odometer kilometres for the year, and in conjunction with that, you use your workplace policy and undertakings from employee as to use that they'll be used within the guidelines. And I think obviously one of the difficulties might be at the end of the year if people have not sat within the guidelines, but then that would have to be a discussion with the employee about how they have used it, which obviously is a difficulty. And I think, yeah, probably the big point to make as well is that just because you're not within the guideline doesn't mean that you are not using, that an employee hasn't used the vehicle in a minor, an infrequent and irregular way. There was a question here in relation to sending employees overseas for 100% business purposes. The company pays for the travel, the airfare, but the employee tacks a few days leave onto the end of that, paid for by themselves, the accommodation, etc. What's our FBT exposure?
This one comes up all the time. I guess employees like taking holidays onto business trips. I guess fundamentally you have to decide whether the purpose of we're usually talking air flights, the cost, that's the main cost about whether FBT applies or not. Was the purpose of the flight a business trip and then the private holiday bit is incidental? Or was the purpose that was actually the private holiday and the business bit was incidental, because that happens too? Or was there a dual purpose? It was partly business, partly private. And I would say in the vast majority of cases that I've seen, the first purpose is the business trip and literally the holiday is tacked on. So if that's the case, then the whole of the air flight should be treated as otherwise deductible. Obviously, if you decide that it was a private trip and the business bit was tacked on, then the whole of the air flights would be subject to FBT. I suggest that's probably not a scenario where the employer is usually paying. And then the middle ground is when you think there's a dual purpose, and in that situation you'd need to decide how to apportion the cost of the air flight between those two purposes. People usually use the days spent on business activities versus private activities to do that. But just remember, you don't have to do that if you've decided that the purpose of the trip was business and that private bit was just incidental. Numbers of days of the activity can start to indicate, what was the purpose, but, it's still possible that somebody's going on a particular conference or whatever that's only a couple of days and then they end up having a couple of weeks as holiday tacked on. That doesn't necessarily mean the initial purpose wasn't business. So it's unfortunately a case-by-case analysis.
The associated question with this is, what if they've upgraded their accommodation while they're there?
Their accommodation. If the employees upgraded
and the employer's paying a higher price?
Well, I think this would be the question, wouldn't it? Because if the employee pays the higher price themselves, then I would assume that there's going to be no consequence.
So incidental, in my experience with the ATO, secondary is the way to consider incidental as well. So was the private purpose secondary to the business purpose? I think most corporates, most government, most not-for-profit, they won't be forking out extra money for individuals' private trips. So typically it's the work costs that are covered and that's it. The one thing where I would be cautious, and I've seen it trip up some employers, is if the employee then arranges a flight and changes the logical flight pattern of where the individual is going. So if your extra couple of days are tacked on to the same location as the work conference, fine. But if you tack on an extra couple of days and it's flying back via a third destination or second destination via home, if that's not a logical flight pattern, then I don't think it matters whether it's incidental or secondary. That whole private leg is going to be private.
Concur with that, yeah.
There was a question on the 2016 PCG, but I do think we might move on for the moment, just we are getting a bit short on time, because there have also been quite a number of questions about the definition of taxi. So this one is quite relevant. We're consulting, or we did release public consultation paper on the definition of taxi last year. Taxi travel taken to or from work or due to illness is exempt from FBT under the FBT Assessment Act. Now, this is relevant because of Uber being, and I should probably say ride-sharing services actually, sorry about that. I'm reading some of the questions that have, but I should say ride-sharing services. Apologies for that. But the question is whether ride-sharing services fall within the definition of taxi. And so this is a question that we have been looking at. We're consulting further internally at this point and with relevant agencies to ensure that we've got a good outcome to that. Some of the responses we received to the public consultation included comments around needing there probably to be a legislative change. That's obviously something the ATO can't manage on its own, and so we are consulting further on that point. You know, there does seem to be a practical advantage to ride-sharing services being defined as taxis, but it's also in the context of what states govern what are taxis and what are not taxis in terms of licensing regimes. So we also have to be mindful of what's happening in each state, and they are all doing different things, which makes things difficult. So I'm wondering whether you had any other comments from what you have seen from your clients.
The submissions that I've seen talk about, you know, needing a legislative change, but perhaps the tax office also using its statutory remedial power to create the definition itself. So that could be a possibility to consider. But also just the issue around thinking about anti-avoidance as well, because if we just sort of say blanketly that all ride sharing is taxis and therefore trips between home and work, you know, are exempt from FBT, what do you do if your spouse, you know, signs up for one of the ride-sharing organisations and drives you to and from work? You know, that would, I guess, need to be part of the enterprise of that car the ride-sharing whatever service in order for that to qualify, because otherwise, you know, it's more of a private arrangement. So I think we just need to be sort of cognizant of that. I guess the practical issue, though, is what people do in the meantime. If they're sending their employees home from work in an Uber or whatever other ride-sharing service, you know, can they be comfortable to treat that as exempt from FBT? And I guess that's a question for you, Anna.
Currently in our employer's guide, we've said that ride-sharing services are not do not fall within the definition of taxi. But it is something that, you know, you would have seen from our consultation that we are interested in developing a practical approach to that. It's just how far we're able to go.
Yeah. Well, there doesn't seem to be any logical policy differential between someone catching a taxi home versus someone catching an Uber or other ride sharing. Probably,
we've all done it now.
So I think logically the law or the administration around it needs to change. I did see that it wasn't listed under one of your most popular areas that's getting your focus. So
no.
So there's probably a small amount of comfort taxpayers can take out of that.
I didn't say that. No. And then the other very quickly point to make is in relation to the minor benefits exemption. So this is something that we were trying to develop some advice, a practical compliance guideline on, and it proved to be quite difficult due to the diversity of the types of minor benefits that are provided by employers to come up with a catch-all guideline that could assist the greatest number of employers. We are proposing that we're going to look to see if we can amend our taxation ruling 2007/12 that may give people some more up-to-date examples that they can rely on.
Some really good common sense examples there. Thank you, Anna, and the panel. I might just throw one in that's come in on the directors. Always a very interesting topic. So, if you can maybe speak a little bit about non-executive directors versus employees, and where does the authority sort of directors being employees end, and the interaction between the two?
Yeah, okay. I think this is probably just going to be dependent on the particular role that the person undertakes. So again, like I was mentioning in relation to trusts, it's relevant in relation to companies as well. So what is the actual role, and what is it that they're undertaking? What's the benefit provided in relation to? I'm not sure if you had any other.
Yeah, I mean, a non-executive director is just a director, and if they're paid, they're an employee. So if they're paid in benefits, they're in the FBT net. If they have another role as an owner of the business, or whatever else it might be, then benefits provided in respect of that connection would not be subject to FBT. But if it is in respect of their director duties, then I guess that's where they're caught from an FBT perspective.
Yeah, there's no simple executives in, non-executives out. That would be a
Actually,
bad mistake.
the other point to raise there is a lot of them contract through their own personal company. So if the company that they're a director for is engaging with the individual's own personal company, then that company can't be an employee. So FBT can't apply there, and PAYG doesn't apply, etc. So when there's engagement through that interposed entity, if you like, that takes you outside of the FBT net for the principal entity, if you like, anyway.
I do just want to make one point in relation to the taxation ruling on travel expenses and living away from home allowance. Somebody's asked here, is 3 months a safe harbour instead of 21 days? So the 21-day rule came about. It was never intended to be a rule. It's not a hard and fast 21 days is it. And please do not take that 3 months is a hard and fast rule either. It is dependent upon the circumstances. So I would always encourage you to go back to the examples within that draft ruling to make an assessment of where your employee sits within that. Unfortunately, we're not going to be able to provide, this is the number of days, for instance.
Time is only one criteria to look at. You need to, and 3 months that's a very long time in terms of travel versus living away from home distinction. So for 3 months to end up in a travel scenario, you would have to have nearly every other factor aligned to travel classification.
Oh, thank you all. We've had some really insightful questions, and in actual fact, I can't count how many, but I'm thinking probably 25, 30 at least by now. So unfortunately, we're not going to be able to answer all of them, but hopefully you've got the gist on some of the key topics and themes that have come through. One idea would be to perhaps, and I'll put it out to Anna and the panel as well, to maybe come up with a list of FAQs or cover these off subsequent to the session, and that way give back the audience what we're expecting. So
of course,
if we're agreeing on that.
Yep. That takes away some of the sadness of not being able to to answer them all.
So again, apologies for not being able to address everything in one hit, but we'll come back to you subsequently.
In about a week or so, or something like that. So, and then we'll send it around to all the participants on the call.
Everyone got that in a week's time, roughly?
1 or 2.
Thank you all for attending, and just like to extend again thanks to Anna for an excellent presentation. I certainly walk away a lot better prepared as putting my taxpayer hat on, and thank you to the panel as well. Some great comments in terms of what's happening out there in the markets, and the CCH for organising. So I'll pass over to Bianca.
Thanks, Sasha. Thanks, Anna, Greg, Elizabeth, and Sasha for today's webinar. If you need help sailing through FBT season, then register for CCH Learning's 2018 FBT return workshops. These will be running next month in March across Brisbane, Melbourne, Perth, Canberra, and Sydney, with workshop tickets only $595 per person. Our full-day workshops are designed to help you and your colleagues prepare the 2018 FBT return and 2018 reportable fringe benefits amounts with maximum confidence and minimum fuss. CCH Learning is also offering a 15% off webinar promotion on their range of FBT, aged care, governance, and practical tax examples webinars. For more information on the FBT workshops and webinars, please visit the CCH Learning website at www.cchlearning.com.au. Thanks for joining our CCH Networks webinar, and thanks again to our presenters. Have a great day.